Hi, this is Joe Gatewood of Troy's Gatewood & Partners. And welcome to a series we are starting called the Mortgage Minute, where I will attempt to answer one question about mortgages during each episode. So let's get started. Great question was asked recently, and that's how do I get rid of PMI, or in other words, private mortgage insurance? First thing I want to say is that there's a misconception about private mortgage insurance, that when you're purchasing a home, you need to put 20% down to avoid the private mortgage insurance. That used to be the case, but no longer. In fact, today, Fannie Mae, Freddie Mac, they're the ones that offer conventional mortgages. They allow borrowers to put just 5% down or 10% down and not have private mortgage insurance. But one thing that you should note is that when it comes to that type of loan, credit is so important. You know, the higher the credit score, the more effective that would be as an option. Now, if you're refinancing, if you have an FHA loan, the question is always asked, when will PMI fall off? Well, it won't, right? So the only way to really do that today is through a refinance. But you don't necessarily have to wait until you have 20% equity. Again, if you had 5% equity and you have a good credit score, we could get you out of an FHA loan into a conventional loan without PMI. If you have a conventional loan, as soon as you have 20% equity, the PMI will automatically fall off. But the last thing I just want to point out is make sure that that's not the only thing that you're focused on, not having PMI, because sometimes having PMI is a better option. So make sure you check with your mortgage expert and they can explain more about this. Thanks for tuning in. If you enjoyed this episode, please like and subscribe and ask any questions in the comments below. I look forward to seeing you on our next episode of the Mortgage Minute.